Hey, hi cousins, it's Marva Eisen here, and I want to go over the chart reading of the market action on June 17th, Monday, June 17th. Now, this was just before the FOMC was going into a meeting to decide whether or not they were going to lower interest rates. And there was a great amount of hesitation and indecision in the marketplace. As a result, market action was relatively quiet on June 17th. Here are the hours of trading, 9:30 to 4 p.m. Eastern. Here we are at 9:30 to 4 p.m. And during this trading session, this entire day, there was only a 10-point spread between the low and the high of the S&P, from 28.92 to 29.02. Only 10 points of a spread. And I didn't trade that day, and fortunately I didn't. And in looking back, there was a bunch of mixed signals here that I really can't even call signals. In fact, there are some days where, in retrospect, it doesn't even pay to trade because there are no clearly defined signals. Remember, I'm a very conservative trader, and my number one objective is not to make money. My number one objective, of course I want to make money, but my number one objective is not to lose money. We never want to lose money if we can help it. So on June 17th, look what happened. The market started out here, and well, let me take you through the trading day. I'm going to replay this session. This is a 3-minute candle. I'm going to start over here at 9:30, and we're going to go show the market action as the day progressed. Let's watch. At any rate, let's start with the analysis of the day. We started out with a whipsaw, a big move up and down from 28.92 to 28.96, 4 points up and down, back and forth. And then vacillating candles, we went up a bit, didn't match the high of the first 3-minute candle, and then we came down, whipsawed back and forth. There was what could have been a shooting star here, but it wasn't because it didn't rise above the level of the previous candle, so that's not an entry. Continued to whipsaw back and forth. There's only 1 point between the horizontal lines on this chart, by the way. So if you go in and you pick up 1 point, you notice that for the most part the candles reverse, and you basically lose it if you stay in. Right over here, there was a signal, a weak signal. The market went down 2 points here, actually 3 points, and then reversed back up to over here. This is perhaps an entry point, but if you went in there, that candle, this next candle, would have not really been a winner for you because you would have been taken out over here. So if you did go in here looking at this as a top and a reversal, you might have picked up a couple of points, 1 or 2 points, but if you stayed in, you gave at least a point back, a point and a half back. So that wasn't, the risk reward wasn't there. And the rest of the day, of course, that was after 10:30. So you probably weren't in the market at that point. So let's head on over to the 2:30 hour right here, 14:30. It's 2:30, and this rise over here, this three soldier rise followed by the doji, that could have been a signal to enter, but not a strong signal. And over here, if you entered, if you sold your position here, maybe you could have picked up another 2 points. Going forward at right here at 1527, 327, there was a little bit of almost a spinning top, followed by a market decline, and this could have been an entry again. These are not strong signals, so if you're going to trade this market, you probably lost as much as you gained. I think I would have if I had traded this market. But then again, I don't know that I would have stayed in if I lost 2 in a row. If I did 2 entries and I got out with a slight loss, I might have, in retrospect, not have traded the market for the rest of the day, because if I'm not able to read the signals, I don't want to trade. There's no point in going in unless you see clearly defined signals that are confirmed with the follow-up action. And that's what I suggest to you. So when you're trading, look for a day where the signals are strong and the chance of you being right are strong, and you don't lose money. And in fact, you make money. And that's what we're here for. So that's my call for June 17th. And if you didn't trade that day, you're probably lucky, and if you did trade, if you made money, congratulations. This is the day, this is the kind of day, especially before the FOMC meeting and results are announced. This is the kind of day where the traders just whipsaw the market back and forth, short back and forth, up and down moves, where it's really tough to make money on a day like this. At any rate, this is Cousin Marv Eisen, and thanks for watching, and I'll see you on my next video.